Alrighty guys, so another video on inflation. So this video is gonna be an important video for me because one of the reasons why I wanted to create this channel was because I want to help people make money. I also want to make money, so I'm definitely gonna monetize this once I get enough subscribers and watch hours and everything. But anyways, I want to help you guys make money, and this video is going to explain why inflation is both well, it's not even really both, it's more so of a bad thing. So this is the reason why inflation can be an extremely bad thing for people who do not own assets. So this video is more so about why the poor stay poor and why the poor can never figure out a way to really get out of their situation. I mean, there's always a way. I mean, like if you live in a developed country, there's always a way, but it might feel like there's not a way. I guess that's the better way to put it. So anyways, we're going to watch this video. I'm going to do some commentary on it, and then also say, try and figure out some ways that we can kind of get around it to help you make money. So let's jump into it.
Welcome back.
Dang. I forgot my headphones. Oh, man. All right, back up. Now rewind. All right, let's go.
Hi, I'm Keith McCullough. Welcome back. I'm here with our senior macro analyst, Darius Dale, and we're here to...
just in case we got some context, Darius Dale used to work at Hedgeye. Now, I like both Hedgeye and I like Darius Dale's 42 macro. They're both amazing services. Darius Dale is the black gentleman on my left, and dang, I can't remember this guy's name right now. Can't remember this guy's name right now for some reason, but the guy who runs Hedgeye is on my right. So, and I might have to flip this camera around. I don't know, but anyways, yeah. So we'll just jump into the video. Now you guys will probably be able to see. I'm sorry. So Darius Dale is the gentleman, is the African-American gentleman, and I can't remember the guy's name on the right. He runs Hedgeye, and they just separated maybe like a year or two ago. Darius Dale went to go start his own business.
talk to you about some very important topics relative to your purchasing power, inflation, and really the effect of emerging markets potentially on your life. And then we're going to talk a little bit about this new political topic called inequality. So the first thing that I want to go through is just the causal impact. You're not going to get this in the State of the Union, by the way. They're whining about inequality, but they're not telling you why there's inequality. Now, one way to drive inequality is through inflation. Now, how do you drive inflation? You drive your currency down, which you can see on this chart. It's a 30-year chart showing you that monetary policy or money printing or the quantitative easing has a direct impact on the value of your currency. So in other words, you print, cut to zero, multiple quantitative easings, and all of a sudden your currency is burning at the stake. That drives inflation. Inflation is a tax. So again, think about that in full. Inflation's a tax. It pays the rich and it pulverizes the poor. It's a big issue. Now, Darius, I want to get into that in terms of quantitative easing by quintile. How do you think about this in terms of what it looks like across the country and how it could have an impact?
Absolutely. So this chart here, Keith, shows household net worth x home equity across quintiles of incomes. So what you see is that the bottom three quintiles, which is each 20% of the population, they don't really have any net worth. They don't really own any assets that can really benefit from the asset price inflation we're seeing from.
Now, to kind of touch into this is why you need to own assets. Like, I don't care if you're trying to make a ton of money trading, but you need to own assets. You have to buy businesses or buy stocks or buy real estate so that you can keep up with inflation. If you're not keeping up with inflation, you're always going to stay poor. And it sucks. I mean, I know it sucks, but that's just how the world is. Like, it really does suck. Like, trust me, like I'm telling you, you have to buy something so you don't stay poor. And even if you are poor, you still need to figure out a way to save up some money and buy, some type of ownership in something that can produce cash flow that will help you keep up with inflation. Because it just sucks, but it is what it is. Like I really don't know a way right now to gotta get around that. like I'm not super into politics to where I can feel like, oh, you need to go to your local, politician and say X, Y, and Z. I don't know, but I do know from an economic standpoint and a financial standpoint, you have to own assets that will keep up with inflation. That way you don't stay poor, because every single year you're losing purchasing power on your dollars because they keep printing it. Now it might help with like social issues, like in 2020 when they were printing stimulus checks and all that stuff. It helps you for the short term, but in the long term it causes inflation, which gives you less and less purchasing power, because it makes commodity prices go up, and it just keeps you in that poor class, to where it's hard for you to get out, and why you feel like you're never able to get ahead.
Quantitative easing.
So 60%, the bottom three quartiles, they basically live in poverty, and there's no way that they own MBS, asset-backed securities, anything like this.
Or stocks.
They don't own any of it. But what they do own is inflation.
Yep.
They got to pay for food, they got to pay for gas. So if you devalue the dollar, you're really hammering these people.
Absolutely. Keith.
Wow. So now how about the highest quintile? Do they all get paid? Is that the way it works? The 80% don't and 20 do?
Absolutely. And then these are the people that take car service to work, that eat iPads for breakfast and lunch and dinner. They don't see any inflation. They're just getting paid by it.
Well, in all seriousness, the highest quintile can really mess this up too, because they can buy high and sell low, which often happens with asset prices. But to be clear, instead of talking like class warfare or the 1% versus the 99%, a factual matter here is that it's 80%. It's the old 80-20 rule. 80% of people aren't affected by the money printing. They don't get anything out of it. I don't know why people pretend that they do. It's just not even backed by anything other than maybe just the politics of it all. Now the next chart I want to go through, Darius, here is the Gini coefficient.
Yep.
Why do people care about this?
So people care about the Gini coefficient because it's one of the most widely used measures to measure income equality. It's a measure of statistical dispersion between the highest 10% of incomes versus the lowest 10%. And typically what you see with statistical.
So you guys might remember we watched a video on Turkey earlier today, and here we go right here. There's Turkey. So U.S. Turkey are like United. A lot of first I guess like G7 countries are going to be on this higher part of the Gini coefficient, but you have Iceland, Norway, Denmark, Czech Republic, Finland. I don't know how to pronounce that. Slovak Republic, Belgium, Austria, Sweden on that lower part, and you're not going to have as much inequality there, but you're going to have a whole bunch of taxes, So it's anyways, I don't even think I switched the camera, but anyways, yeah, I mean, let's just jump into the video and see what else they say, because I don't want to say something that they're going to already say anyways.
Dispersion is a lower number means that the population sample is more homogeneous, and a larger number means the population sample is more heterogeneous,
right,
meaning there's more dispersion.
So dispersion, we're looking for the high versus the low.
Absolutely.
And that's another way to, the politicians should get this, is what they're talking about.
Yep.
The rich are getting richer, the poor are getting poorer. Yeah. How does that happen? It happens by burning the currency.
Yep.
Inflation goes up, the poor starve, and the rich get richer. Now, does it surprise you at all that the U.S. is over on actually one of the worst Gini coefficient readings?
Not at all. I mean,
it historically hasn't been there.
No, not at all. In fact, in the 80s, it was on the far left of the chart when we had a policy to have a strong currency and higher interest rates and to protect.
So to go into that, and I think in the last video I mentioned the 70s and 80s, we were having crazy inflation, but we had raising interest rates, which were kind of slowing down that inflation. But what happened with that was, when you have high rates, it causes people to take out less and less debt, but it's stabilizing your currency. So there's not gonna be as much of a gap between the rich and the poor. But it also means there's not going to be as many jobs available, because it's not people that are really trying to take on risk and grow their business to, a huge level to where they're just going to hire and hire more and more people. So yeah, let's just jump back into the video. and see what they have to say.
Protect the value, the purchasing power of the people actually got paid on those policies.
Yes, it's interesting. I mean, Iceland, for those of you who don't know, that's precisely what they did. They kicked out the bankers. They took purchasing power over all these conflicts of interest. And look at Iceland. They're sitting right over there. I mean, maybe not the warmest place on earth, but the reality is it's a pretty good place. These countries on the left side actually control their currency. Norway, Denmark, Czech, Sweden. These are better places in terms of Gini coefficient, whereas the U.S. is sitting beside Turkey.
And Mexico.
Nice job, Bush and Obama. By the way, this is not a political statement. It's just all about all of them. Bush and Obama had the same thing in common. Ben Bernanke cut rates.
So this video was made in either 2013 or 2014. So Trump wasn't in office, Biden wasn't in office. But either way, both presidents have continuously had QE to an extent. Now, when Trump was in office, there was a little bit more. There were a couple more rises in rates and interest rates, which kind of slowed down that inflation a little bit. But what happens when you have the rise in rates is equities start to go down, or they're not going to go down, but you have people pulling capital because instead of rather having it in stocks, they would rather have it in cash, because usually when you're going to have that hawkish rate, people would rather be in cash or go to bonds instead of being in stocks or equities, because you don't have that risk of inflation really, outpacing that. So it just depends on how long they're hawkish on rates. But then in 2020, we know what happened. So when they started to continuously have rates low or make them even lower, and some countries even went negative interest rates, that is pretty much QE, which is meaning that you're not making anything saving money or purchasing bonds. So you want to be in equities, you want to be in risk on assets. So let's see what else they have to say, and then we'll do some commentary on that as well.
To zero, devalue the dollar, and never talk about it. Okay, great. Fourth chart. Emerging market currencies. Can you review what's been happening here?
Exactly. So this is a chart essentially of the emerging market nations' currencies that chose to engage wholeheartedly in the currency war over the past few years. And what you saw really was them cut rates, lower their currencies, devalue their currencies.
Do what we told them to do.
Do what we told them to do.
We
exactly.
taught them this.
So they were chasing exports, while at the same time they're perpetuating slowing growth and rising inflation in their local economies.
And that's an important, maybe just a subtle point that Darius just made, but a really important one. Western academia, where a lot of these emerging market students come to learn this stuff, basically are taught, you need a weak currency because it's good for exports. Come on, man. That's 70% of the economy is consumption. Exports don't even move the dial. Even at the all-time low in the U.S. dollar, U.S. exports minus imports.
So when we watched that video on Turkey, I think I watched that video on Turkey yesterday, but that video there, you could see it was hard for people to even buy a car. Like, people have to work, I think it was like 2 years or something like that, to be able to just purchase a $30,000 car. And that's what happens. It's like you have a lot of these countries that want to just devalue their currency, and yeah, it makes the stock market go up, it makes asset prices go up, but then it gets to a point to where people can't even afford it. So then when it comes to that point to where people can't even afford the asset, then it does not make any sense. It does not make any sense to me why countries devalue their currency so much to where they're just making that wealth gap even greater, and eventually gets to a point to where people just can't even afford the basic things. So let's jump back into the video, guys, because this is one of the interesting videos to me. Like, they really do a good job at explaining inflation and why we have such a huge wealth gap.
This was nada. Didn't do anything. Nope. So what we do see here is just raging devaluation eventually gives Argentina, Venezuela, etc., inflation locally.
Yep.
Too much inflation slows consumption growth, and boom, they're in crisis.
And more crisis. You actually have political upheavals in these countries.
Yeah, you have political upheaval.
People taking the streets.
Because of the next chart, and this is the one I think we should probably end on. Inflation is a tax.
Indeed.
So why would you have social unrest? If you tax the people without calling it a tax, would that be maybe a good reason?
Totally.
That would be
for me.
So Venezuela has raging. This can't be the right number. That's too low, bro.
No, well, actually, that's the yearly average. The latest number, which was released from an October number, is actually like 56%.
56%, and it's amazing. So the governments make up the numbers. They tone down the numbers. Isn't that why Argentina has two numbers here?
Absolutely. So Argentina has an official rate that they put out from the government, and then private sector economists actually put out another rate that they estimate inflation to be running at. It's a total gong show. The IMF's getting ready to kick them out.
But we should have one of those in this country. I mean, in this country, at the all-time high in food prices, oil prices, gold prices, there was no inflation.
Nope.
Take their word for it. Right, come on.
Right.
I mean, but this really does upset people. It causes social unrest.
Absolutely.
So it's interesting to kind of watch. I mean, just for the record, some people would also say, well, look, the stock market's up, that creates wealth. Well, Venezuela's currency was down 32% last year.
Yep.
Their stock market was up 481% this year. How are you doing in Venezuela? Nobody owns the stock market in Venezuela. You can't get out.
No.
So if we continue to do this stuff, it will be, at least to me, Darius, it'll be amazing to see the political rhetoric almost blame us or something for inequality.
Yeah. I mean, these politicians are good at what they do.
Wow.
Yeah.
It's the art of storytelling. So again, that might have been Davos, that might have been the State of the Union, but we just showed you the facts. The fact of the matter is, if a government has a policy to burn your currency, you will get inflation. You'll also get slower consumption growth. The poor will get poorer. The rich get richer. And I don't know what a politician's going to do with that. So that's it. If you have any questions, I'm at Keith McCullough. That's my Twitter handle.
Keith McCullough. I remember Keith like midway through the video. But I could not remember his last name. McCullough. Okay. Anyways, yeah, guys. I mean, that just kind of goes to show you how inflation can really hurt an economy and a country, for that matter. Because as you keep printing more and more money, that money becomes worth less and less because there's so much supply and only so little demand. So that kind of just goes to show you why it's important to know what your country is doing. Are they doing quantitative easing? And if they are doing quantitative easing, how are you going to hedge that inflation? So sometimes it's like you might need to leave your home country for investment opportunities. Like if I was Turkish, I really would not be investing heavily in Turkish stocks. But Turkish companies as a whole, if they keep everything internal, will do perfectly fine. But it's just the people can barely live, and you end up getting countries that end up printing like $500 notes or $1,000 notes. And let's just say instead of the USD, where we have Benjamin Franklin's on the $100 bill, you end up having, some other president or influential leader in the US on a $500 bill or $1,000 bill or $10,000 bill, because there's just so much money circulating that $100 really isn't worth anything anymore. So anyways, guys, I would say you want to own assets that can keep up with inflation. You want to be invested in markets that are real estate or land, businesses that produce cash flow. You want to keep money circulating in your pocket that aren't reliant solely on a job, because a job, usually inflation is 2% a year. If you're not getting a 2% raise every year, you're losing money. So anyways, that's the video for today. I'll probably do another video tomorrow, or maybe another video later today. We'll see how the brain is working. But anyways, guys, please like, comment, subscribe, share with a friend, and please share with a friend. Like seriously, this is why poor people stay poor, and it's really unfortunate because I know getting out of being poor is tough. Like you have to go through a lot of struggles, and a lot of things that you want you have to do without, and you have to get to where it's like you at least have a decent amount of capital to where you can start investing, and then you get that snowball effect. So I think Charlie Munger said that the first 100,000 is the toughest, but then after that you get that snowball effect to where making money becomes a lot easier and easier and easier, as long as you're not trying to spend the money, you're just reinvesting the money. So anyways, guys, I'll talk to you later. Love you guys. Peace.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know Cause when they be up in those trenches, man, they show out. But what they do